And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. Right after the midterms, I'm hoping for policy on stablecoins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
Hey guys, welcome back to the Daily Crypto. Today we have Kevin O'Leary as he discusses the cryptocurrency meltdown, how it can help develop a better industry, and why crypto requires more regulation. The cryptocurrency winter has highlighted the vulnerability of Bitcoin and other crypto assets as repositories of currency, with prices of most crypto assets plummeting in recent months. The concept that, unlike other hazardous assets, they will be resistant to fluctuations in interest rates or provide inflation protection has been debunked. The stock market has taken a battering recently, but the cryptocurrency meltdown has been far more severe. Bitcoin's price has dropped by around 2/3 from its high in November 2021, and the overall market worth of all cryptocurrencies has fallen from around $3 trillion to less than $1 trillion. Even stablecoins, cryptocurrencies nominally backed by dollar reserves, and other financial assets that should help keep their price stable were vulnerable during the slump. The cryptocurrency shakeout may benefit the industry by lowering some of the sector's rampant speculative trades and aiding in focusing on the technology's positive attributes. Is this the tipping point for the Bitcoin revolution? Let us now hear what Kevin O'Leary has to say about it. Do comment your take on this prediction down below. Don't forget to hit the like and subscribe button if you enjoy the content we do here on this channel. With no further ado, let's head straight at Kevin O'Leary's cryptocurrency price prediction.
No, I'm actually averaging down on a couple of the big market cap names. I mean, one of the challenges, and this is proof now for why we need legislation and policy on crypto, because if we had institutional capital coming in under the market, if they had allocated 50 basis points or 100 basis points to, let's say, Ethereum or Bitcoin, Solana, Polygon, whatever, you would have had a bid. Instead, because we're basically under-owned by institutions, we have tremendous volatility. And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. Right after the midterms, I'm hoping for policy on stablecoins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
The first cryptocurrency crash was probably caused by the UST falling from the $1 price, but this second cryptocurrency crash is primarily macroeconomic. After the release of the report weeks back, the Consumer Price Index in May set inflation at 8.6%. This surprised all markets, with the Dow Jones Industrial Average dropping 900 points and the S&P 500 entering the bear market. The Nasdaq Composite also fell 4.68% as inflation reached its highest level since 1981. On Monday, June 13th, the price of Bitcoin plummeted from $27,000 to $22,000. Bitcoin's price decline continued until June and June 15th, with Bitcoin trading at a low of $20,592 today. Is the Bitcoin revolution coming to an end? Let us now hear what Kevin O'Leary has to say about it.
Here's what I think is going to happen. They're going to pick one thing. They're going to pick one thing and put policy on that. It's going to be stablecoin to start. And the policy there is going to be pretty clear. All the bills say the same thing. They want total transparency. They want an audit every 30 days. They want no duration more than 12 months on any asset holding up the coin. So that means T-bills on average are going to be 7-8 month duration and US dollars backing it. And that's the same kind of rule you're going to find in a Schwab money market or a Fidelity money market or any money market fund, with the benefit of all of these systems, once you put policy in place, having the ability to be a payment system. So I would love to see this happen. And the reason I think you'll get policymakers on both sides of the aisles backing this one thing after the midterm elections is this guarantees making the US dollar.
If properly executed, regulatory oversight might actually help the crypto business by increasing stability and trustworthiness. The cryptocurrency shakeout may benefit the business by lowering some of the sector's rampant speculative trades and aiding in focusing on the technology's positive attributes. Is this the start? The turmoil has frightened investors, wiping out more than $2 trillion in value in a few months, and wiping away the life savings of individual traders who spent largely on crypto ventures marketed as secure investments. The sharp decline in wealth has fueled worries that the crypto meltdown would contribute to a larger recession. The crypto market's market valuation of less than $1 trillion, which is less than half that of Apple, is significant in comparison to the United States' $21 trillion GDP or $43 trillion property market. However, according to Goldman Sachs estimates, U.S. households control 1/3 of the global crypto market, while a Pew Research Center poll indicated that 16% of U.S. individuals have invested in, traded, or utilized a cryptocurrency. As a result, there is some national exposure to the crypto market's significant sell-off. O'Leary, who has stated that 20% of his portfolio is in cryptocurrency, also points out that these losses are spread out globally.
Well, the great news about the crypto economy and even positions like Bitcoin or Ethereum, these are decentralized holdings. It's not just the American investor exposed here. Bitcoin is all around the world. And it's only $880 billion before the correction, which, as you rightly pointed out, is a big nothing burger. And so that's nothing. I mean, even all of crypto under 2 trillion is still nothing in financial services. So there's so much upside to this sector. When we do get policy, when we get institutional investors and sovereign wealth involved, then you'll start to see real assets. But, if Bitcoin went down another 20%, it wouldn't really matter because it's spread around everywhere. And most of the holdings are not institutional. For all the excitement about Bitcoin, no institutions own it yet. And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody,
a drop in Bitcoin markets may have you worried. Use it as a wake-up call to reconsider why you're in the market in the first place and what are the opportunities that come with the risks. For one thing, Bitcoin has recovered strongly after its previous sharp fall, but it has become a serious existential problem, especially if many countries place a ban on its use and perhaps even the ability to own it. If faced, there is no guarantee that it will recover again, and it's kind of a real risk that can destroy or make a profit when the reality isn't as harsh as expected.
Can't pick the bottom. It's impossible. You have no idea when it's going to happen. But if you're staying long the category, you need diversification. I have so many different positions on right now, and they're all over the map. Now, come year end, what'll happen, because this is a year where we're going to be looking at tax returns on all crypto trading and income, there'll be a lot of maneuvering on the projects that did not recover to take them as tax losses versus the ones that did. And that's going to be the nimbleness of trading.
At the market level, the presence of leverage increases the volatility of assets because its price is less predictable. Increased volatility harms Bitcoin's capacity to function as a store of value. Individually, leverage raises risk and increases the possibility that an investment may become absolutely worthless.
I don't use leverage on crypto because I've seen volatility like this in the past. There are certain assets where I might put leverage on, but it won't be in crypto. I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that. But, people will learn their lessons. This is a good thing in the sense that
companies are worried about a recession, and many in the crypto industry are prepared for a crypto winter. Coinbase is cutting off 18% of its staff, or around 1,100 individuals, according to an email issued to employees Tuesday morning. CEO Brian Armstrong highlighted fears about an impending recession and claimed the firm developed too rapidly during a bull market.
No, I wouldn't say that. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now.
With that being said, is the current crypto price crash really the tipping point for the Bitcoin revolution? Comment down below your thoughts, and don't forget to like and subscribe. This is The Daily Crypto. We'll see you in the next video. Bye for now.